Hi everyone and welcome. It's Steve Johnson here, Chief Investment Officer at Forager Funds, and I'm joined by our Portfolio Manager on the International Fund, Harvey Migotti. Hi Harvey.
Hi, how are you?
Very well, thanks. How are you?
I'm very good, thanks.
That's good. We've just released our February monthly report and talked a bit in there about cutting our exposure to some of our most successful investments over the past 12 months, getting very concerned about some of the valuations of these stocks that are good businesses growing well, but where the share prices run up massively. It's already looking a little bit dated before it's gone out. That's sort of been the theme of the past 12 months, that things are moving at breakneck speeds.
Yes, we need to post this video quickly because things have pulled back quite heavily over the last week. So just by design, we came into the end of February with the highest cash weighting for 2 years or something, since I joined at least, and ready to deploy into new opportunities. And I think it's been particularly exciting for me, seeing some of these amazing things pull back and come back to more sensible, reasonable valuations. So
yeah, it's been a really violent rotation out of some of these stocks. We wrote in the report an airline that we own in the US was up 40% in February, and really from the middle of February through to the past couple of days, you've seen a lot of these stocks. I think the QQQ index, which is an index of super high quality, rapidly growing, well, I don't know about the high quality, but rapidly growing companies for the most part, down, would it be more than 20%?
Yeah, it's been pretty violent. I mean, you had a violent upswing as well, so we shouldn't forget that on a 3 to 6 month view. A lot of names are still up quite a lot, but we certainly saw quite a bit of complacency developing in the market. A lot of retail investors investing in businesses that sound sexy on paper, whether it's in renewables or EVs or whatever else, and valuations kind of probably got ahead of themselves. You needed this correction. I'm actually really happy for it because you had a bit of a rise in rates, a bit of a rotation into some of the beaten up sectors to come to more normalized valuations, and I think it's been healthy, to be honest. The market was acting a bit unhealthy for my liking, and this has been good. And to be honest, we came into this with a good pile of cash. We actually bought 2 new positions that we've been tracking for a while now.
So I was about to ask, I mean, it might feel a bit funny for people. We only just released a report saying we've been selling some of this stuff, but the magnitudes of the falls have been so significant. Are you seeing things out there that it's time to start buying?
Oh, 100%. I mean, like I said, we just we actually pulled the trigger on 2 investments yesterday. Names that we've tracked for a number of months, just waiting for a shot, and we kind of I hope it's a free kick on goal, but it certainly feels like a decent chance at least. Names that kind of have fallen 40% from the highs for no particular fundamental reason, just kind of got caught up in the rotation and various other things, and it's been great from that perspective. We love that volatility because it allows us to buy really good high quality assets at a discounted price. Both of these happen to be in the growth bucket.
Yeah, we won't talk about specifics just yet. We'll maybe put them in a future monthly or quarterly report, but it's too early at the moment. But a feature of a couple of potential investments that you and I were talking about last night was there was a recent capital raise in there. The share price is way down on where the capital raise was. Why do you, or do you think that adds to the investment interest? Yeah,
I mean, what happens is you get a lot of people come into raises because they want to make a quick buck. You kind of come in below the market price. You can deploy a significant amount of capital in something that's maybe not so liquid. And you buy in with the hope that you can sell 10-15% higher. You're kind of almost a tourist in the stock. If you happen to do that into a big sell-off, it's one of the easy things to cut. New position for you, you buy in.
You haven't necessarily done a lot of work.
Exactly, right? Raises happen quickly, right? I mean, you're talking 24 hours, maybe a few days if you're lucky. And it's an easy thing to cut. And I think we found, one of the opportunities that we found is one that we've loved for a long time, where they just did a big raise back in February. And a lot of these people, into the downturn, they just sold out. They're like, okay, I give up, I'm not gonna make my 10%, I'm down 10. Let's just get out while we can. And that's just exacerbated the fall. It kind of didn't make sense, but it got caught up in that whirlwind. And we love those opportunities because you get them, you don't get them often, but when you do, and it's in a name you like that you've tracked for 6 months, you have to pounce.
Yeah, you get the price falls, and often you get a lot of liquidity that comes with that as people start to run for the exits. So look, the pace of change over the past 12 months has been a lot of hard work for you, I know, and for the rest of the team as well, but it has been reaping some sensational performance results as well. And to be honest, we hope the volatility continues over the coming months, years.
Yeah, it's like I said, it's been good. 25% of our portfolio is now new ideas that we've put in since January. It's exciting. I'm as excited as ever about the potential here. I think the rotation's been great. It's a good time to, I think, both invest in us and buy parts of the market that have perhaps pared back. There's always opportunities is kind of what I'd say. Yeah.
Jump on our website if you'd like to invest, or get in touch if you have any questions. Thanks for tuning in.